Alright guys and girls, this is John aka the Forex Dad, and in this video I'm going to go over what we refer to as the banker strategy. It's a way to look for entries on really any time frame repair. We just kind of search them out. So what we're seeing here is consolidation, and if you've ever learned any kind of retail strategies, consolidation is where a lot of people look for equal highs, equal lows. So as you can see in this area we have both. So what happens during consolidation is opinions are formed. You'll have some traders who think that this is going to go up. They see it tagged the support level, so they put in a buy order here, and they'll put their stop loss, somewhere down here, maybe below this wick or something. Same thing on the other side. You have other people who think that this is going to go down, so they'll put their sell orders here, and they'll put the stop losses somewhere up here in this area. All right. So what the banks do is they don't trade the way that you and I trade. They can't. Their orders are too big to do that. So what they do is they'll wait for this to build up. Okay, and then once there's enough liquidity, which is your money, they will go ahead and make their move. Now typically what is going to happen is they'll go one way or the other first. They'll either go up and sweep the highs, or they'll go down and sweep the lows. So let's see what happens in this scenario here. Oh, there we go. They just shot down. As you can see, they shot down, swept all these lows, took all those stop losses out. All right, and then now it looks like they're going to be coming for the other side. Let's speed this up a tiny bit. All right, looks like there they go. They took the highs out here too. So I should have stopped it right before this for this example. So what you can see is the banks, they sell it down to then buy it up, which means that they are in drawdown now in these sell orders, since this is going high, and they don't care. They don't have stop losses. They don't care about drawdown. They trade hundreds of billions of dollars every week in the Forex markets. There's about 7 trillion moving through it per day. And I know that JP Morgan was one of the biggest banks that trades, and they traded just about 10%. So out of 7 trillion, that's $700 billion a day that they're pumping into the market. So they don't care about a couple million dollars in drawdown. It's no big deal to them. So what this happens, all right, that leaves us a clue. So we go ahead and we're going to take this banker's candle, we call it here. It's the last down candle before the up move. And we're going to mark that up. All right, and then we're going to take our long position tool, entry. We're going to put, there's 2 ways you can do the stop loss. If you're first starting out, do it below the wick. That's a 13 pip stop loss. Some people put it right on the candle, but 6 pips, not enough breathing room in my opinion. So you take your 13 pip stop loss there. All right, and we're going to target 1 to 5. That's what we shoot for. We're going to risk 1% to gain 5%. All right, so let's play this ahead again. See where it goes. Oh, there we go. There's your 1 to 5 right there. So for every 1% you risk, you would gain 5% on your account. Some people like to risk 1%, some people like to risk 2%. If you're a little more aggressive and you risk 2%, there's 10% right there. Now the great thing about this trading strategy is you don't have to have an extremely high success rate. Let's say you are risking 1% per trade. All right, and let's say you lose 3 out of 5. So you lose 3, that's 3% that you lost, but you win 2. And if you're shooting for 1 for 5, that's 10%. So you're still up 7% for the week. If you lose 3 out of 5, if you lose 4 out of 5, you're still up. You lose 4, that's 1%. Win 1, that's 5%. You're still up 1%. It maybe not be what you're shooting for, but it's better than being down 1%. So that's called the banker strategy. It happens over and over again in the markets. And what we like to offer for you now is we have a free trial, a 7-day free trial in a Facebook group. All right. Our team does training calls. They do them Monday through Friday at 12 p.m. Eastern Standard Time, noon. So if you get a free trial group, we stream them right into the free trial group. And if you are working and you can't make it, don't worry. You have the recordings go up right after it's over. Facebook publishes the recording for you so you can watch it maybe later that night. And it's going to let you spend a week with us, get to know us, get to know some more about the strategy, and see if our team might be a good fit for you. So it's very simple to get involved. All you got to do is shoot me a message on Messenger here on Facebook, if this is where you see it. If not, you can head over to my Facebook page. There's a link in the description if this is on YouTube and you see it there. Go ahead and just send me a message saying you want to get in the free trial group, and we'll get you rocking and rolling. So I hope you enjoyed that video, and I will see you in the next one.